Hey, good morning, everybody. Well, good afternoon. It's about mid-lunch in New York. It's about 6:30 a.m. here in Honolulu. Interesting start to the week on the market. But, before we get into the market update and stuff, I just want to talk to you about something that it kind of came up in a conversation over the weekend I was having with somebody. And I just thought it would be important to share with, especially with you new investors, you new wealth builders. And this is a very, very important, serious subject. The subject is overtrading. Look, with with options, there's a certain dynamic to options, right? It's a whole different animal from the rest of your portfolio, and we teach that to our members. Only a certain percentage of your portfolio should be in options, and the rest of your portfolio should be in what you shouldn't be overtrading, and we're going to talk about in a second. But like I said, with the dynamic of options, what is the biggest risk about options? You have a time frame. So you basically have to be right within that time frame, and that's a big part of the risk, and that's understandable. But when you buy a stock, okay, you buy Apple today and you buy it at 133, and you're like, ooh, 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 right? I'm gonna be rich, and yeah, maybe, with Apple you probably are at some point, but you don't have that dynamic of options, and that's a lot of people make that mistake, especially in today's market where all these the advertise people advertise and marketing, right, that you see in all these stock market advertisements. Make money now, make money now, make 1 million now, make it now, make it now, turn your 5,000 into 100,000 in 7 weeks, this and that. It all pushes you towards that mindset, and you got to be smart enough and you got to be disciplined enough that you can separate that. Now, like I said, options are a different dynamic. We are an options trading company. um, but we don't live and die on options. And the way we can maintain that risk, we have a very set system, and it controls that risk because we know there's going to be times when options just don't work. Markets are volatile. Markets do really strange things. The news cycle is so dominant, right? Um, that you get a lot of times you get caught in something that's just unexpected, and that time frame just kills you. You can't sit it out, you can't wait it out, you can't be patient because the clock's a ticking. But when you trade your stocks, guys, when you buy your apples, when you buy your stock of the week that we have, by the way, the stock of the weeks have been just doing fantastic, guys. I'm so proud of that. And I hope some of you took advantage of it. And if you haven't, we're going to have here's your marketing tomorrow. Tune in for the stock of the week because it's going to be something that's going to blow your mind. I know we say that every week, but this time's even more of a mind blow, maybe on the level of the 60s mind blow. But look, there's your marketing, guys. Uh, Over trading, guys, over trading. There's a lot of reasons why you should never over trade. First of all, if you're over trading, you're probably not picking the right stocks for your portfolio. And when I say stocks, I mean buy and hold, build positions, let them make you rich. Let the money work for you. For a certain to a certain extent with options trading, you have to really work for your money, right? You got to watch those options. You got to make sure you time it right. You got to make sure you get into the right strike, right premium, this and that, while the stock, you know what I mean? Deltas, gammas, rolls, all that stuff. But with your stocks, really, you want something that's going to work for you. And this thing should just work for you. There should be no, you have to do some work for it. You have to do this. Once you buy that, really, it's just managing it, right? And what do we all want to be in life, right? You don't want to be the bottom rung at the corporate ladder. You want to be a manager. You want to be up there, CEO, whatever, right? And that's what your stocks let you do. But you take that away when you overtrade. And what I mean by that is, look, think about it. I hold a stock for a year and I sell it for a big profit after a year. I hold a stock for 6 months and I sell it for a big profit after 6 months. What's the biggest difference I'm going to see in that? Well, it's going to be in April. You know why? If you hold a stock and you capitalize on that gain after a year, your taxes are almost half what you would pay on a short-term capital gain. For you guys that want to research this a little bit more, because look, I am not a tax advisor, okay? So I'm just speaking from experience and how I manage my portfolios. But you know, you sell that stock at 6 months and you make, say you make $1,000 on the trade. You hold it for a year and you make $1,000 on the trade. You're going to keep about 500 after taxes on the short-term one, but you're going to keep about $700 to $800 on the long one. And it's for you guys that want to research it a little bit more. If you have a tax advisor, you can ask him. The difference is long-term capital gains versus short-term capital gains. If you find yourself doing this, you're either being petulant as a trader and you're making some mistakes. And what that is first of all, you're entering stocks that aren't right for your portfolio. You want, I always preach this, right? And with your stocks, you want strong balance sheets, you want great dividends, and you want longevity, right? Think of the COVID, right? If you were buying Apple before the COVID and then the COVID happened, dude, you could have got Apple dirt cheap. And then just enjoyed it. But instead you were selling because you were panicking, or you were selling because you were letting the market freak you out. Or the most, this is almost a sin when people say this, I'm going to buy the shares back cheaper. So, you guys have heard that saying. Everybody's got friends that say that, right? Oh, I bought XYZ at $20. It's at $35 right now. I'm going to sell it right after 3 weeks, and then I'm going to wait and I'm going to buy it back cheaper, right? And that's a crapshoot right there, right? What if it doesn't get cheaper? What if it keeps going up? And here's the other thing too. Are you really going to remember to buy that when it goes cheaper? You're going to be on to other things, other blinky lights, because you're a blinky light trader. Let's be honest. You trade the blinky lights. You like the blinky lights. You're a firefly. Don't be like that, guys. I just wanted to share this before we get into the market update. Be very disciplined with your stocks. Make sure you buy the right stock. Don't just watch somebody on CNBC or Fox Business News or whatever, Bloomberg. Is there still even a Bloomberg? I think I asked that last week. But you know what I mean? And you go buy it, you know what I mean? Research your stocks. You see, when we do the stock of the week, we always have a thesis behind it. Why should I buy this? Think about all the stock of the weeks that we've done. And then when we did Playboy, what did we say? We're buying Playboy. We don't intend to hold it. It was like an option trade for us, right? I mean, we're just trying to take advantage of the NFTs. And we figured hot chicks, NFTs, millions of dollars, right? I mean, if you'll buy a sports card, why wouldn't you buy an old Barbie Benton? That's showing my age there. But you see what I'm saying, guys? Trade smart. You know what I mean? Know your thesis when you're going into it. Why am I buying this? 15 years ago, if you said, I'm going to buy a share of Apple, and you know what, if it goes up 100%, I'm going to sell it. I'll buy it back cheaper later. But think about that guy that bought the share and didn't sell. Look at his portfolio right now. Don't overtrade. The minute you grab a capital gain, you're going to get taxed. So you're losing some of your profit there. The minute you sell a stock, you stop getting compounding, right? You no longer get dividends, right? So you're just going against the grain there. Again, on options, absolutely. You've got to be there's got to be a little bit of market timing. There's got to be a little bit of finesse, and you've got to really manage that trade. What's better than that? Well, you want to do that because there's so much opportunity to really get some steroid level growth in your portfolio, but you don't want your portfolio to be dependent on that. What you want to do is have a bunch of stocks so that you can, along with whatever options you're playing, and those go to work and you don't have to worry about them. All they do is come back home every 3 months with a paycheck, right? And that's what you like. Other than that, guys, let's get into the stock market. So just remember, don't overtrade, have a good thesis and stuff like that. Because I was talking to this friend over the weekend, and it really hit me that, you know what, this guy he's chasing his tail. And the person is down a lot of money, and you're just not making it back with it. Think about it. If you're down X amount of dollars a year ago and you had just bought stocks and held them, the way the market is, any stock worth its weight is up exponentially right now, right? It's been a great market leg up over the last year, especially since March when the COVID happened, March and April. So look, guys, interesting day in the stock market. Right now, we're just coming out of lunch. You can, let's do a refresh here. Let's go ahead and let me share screen here so you guys can see what I'm talking about. Pop that on a share screen here. All right. So there's your chart of the spider. You guys know we're in a little short on the spider and we're not worried about it. You can see we had a little peak here, but we're not breaking any tops and stuff like that. We kind of just filled this gap from 2 days ago. And now it looks like it wants to refill this gap and maybe go lower. We're going to stay with this trade. These expire on Friday. We talked about them last week, and we'll stick with this trade for now. Nothing's changed on this. The market looks like it's got weak legs right now, guys. Let's pop on over to CNBC. Of course, I'm not supporting you, CNBC. That's not my job. And you can see the NASDAQ's down about 50, 60 points. That's after a nice, strong start from the NASDAQ. The Russell's up about almost 0.75%, which is always good, right? It's like, remember something about the Russell, guys. Russell is your small cap. Small business drives the American economy. You always get to see the big stories, right? Microsoft's, your big enterprise companies. But for the most part, the economy is driven by small business, and the Russell 2K is your small cap. So it's always a positive thing when the Russell is doing well. You can see your VIX is a little bit red, so there's not a lot of fear in the market, right? But that's always a lot of times it is a prelude to some kind of a pullback or some kind of a correction, which we're probably due for something here. Remember, we just came off tech earnings last week, and tech earnings were great, but the market just really didn't react to it, especially Apple and stuff, right? The week before that, it was the banks and stuff, and the banks did great. And the banks actually showed up in the stock prices, but you're starting to get this little fugly moment in the market. And now we're rolling into basically you get energy and retail stocks the rest of the way. One of our plays, right? Suncor, stock of the week. Is pushing highs right now, and we're in some options on that. The options are all the way out to September, but they're already about to hit a profit. That'd be nice. Other than that, guys, we'll start. We have Suncor after the bell. We have a bunch of about 180 stocks reporting earnings this week. So it should be a fun week, but it's a different kind of stocks, energy stocks. If you look at oil's having another good morning this morning. You can see it's pushing that 64, 65. This thing gets over this little hump around 65, 66. It'll be 75 in a heartbeat. The chart is just saying that. And you can see energy just across the board, even with the India shutdown, right? Even with the Canadian shutdown, even with Japan still being kind of bottled up there. You're starting to see this moving from oil. As these other ones start coming around, you're going to see consumption, and this thing will be triple digits, maybe by the middle of summer. We'll see. I mean, that's, of course, a prognostication, not a procrastination. Procrastination is what we do when the market's closed. But look, guys, and you can see oil is having a nice bullish day this morning. That's after a little bit of a rough morning. You know, the inflation fears. Gold's still stuck below that 1800. It's taken out that 1775. So it's getting a little bullish. So there might be some soft position building going on that in anticipation of inflation. We still stand by. We think there's a rate hike by the end of the year. Based on inflation. We think we'll start getting some real hyperinflation here at some point. And then the markets, right? We're down about 71 on the NASDAQ. We're up about 12, 13 on the S&P. And 285 on the Dow. The Dow has been the star of the day. And that's probably, again, it's your rotation into exactly what we talked about, not over trading, right? Your institutional money, your big money is starting to get a little defensive. And so they're rolling into those stocks where they don't have to manage them, right? You don't want to manage stocks through bad times. They're very difficult to manage. I always talk about it, right? When you're in these bull markets and these bull legs, basically what you can do is just throw a dart at a board, and whatever you hit, that stock will go up, right? But when you get in bad times, guess what? You have to really, you need to be able to step back, and you need to let the stock do the work. That's what it's built for. You got a solid balance sheet, solid product, and you got a solid dividend. All you're doing is buying itself cheaper, which is nice, right? So, look, the market's a little bit bullish today, except for the Nasdaq. The Nasdaq started off nice and strong, and then it just kind of rolled over. We think the rest of the market's about to do the same with it. Energy earnings are a good thing, but the energy sector, we've seen it before, can drive higher without the market. It does get a little autonomous there. Yeah, unlike tech, right? When tech goes down, it takes two markets down with it automatically, right? Tech heavy Nasdaq and the S&P, which basically right now is a tech index, just with a little bit different of balance sheets. So we'll see how this shakes out, guys. Like I said, we've got some earnings coming out. One of it for us, Suncor is one of them. SU. We'll be looking at that after the bell. And we've got some unemployment reports coming out. I think we got the ADP, the private payrolls on Wednesday. We've got the big one on Thursday. And we'll see how things shake out. I think we've got Lowe's coming up and some of your big box retailers coming up this week. Other than that, guys, let's see how it shakes out. You see, like how we trade this spider trade. We don't panic, right? A lot of people would be in the right when they see that open this morning, that big green open, they're killing those puts, right? But wait, let's see how the market shapes up. And that's smart trading. That is a important component about your portfolio, to your portfolio building. And it's exactly just like that. Oh, we bought Ford, right? I think I talked about it on Friday. We bought Ford because we liked the earnings report. And despite getting that news about losing half the production over the second quarter, we realized they also said too about the middle of the second quarter, that'll start erasing and going on an upward trajectory. We're at May 3rd. Guess what? This is the second month of a 3-month second quarter. So we're in the middle. So we bought some. Ford goes down a little bit today. Do we panic? No, we just entered the trade. Stop over trading. Stop managing. Let the stock do what you want. Let's see how this stock looks in 5 months, 6 months. Okay. And it'd be real nice, right? To have a nice little tidy profit, getting dividends, and a lot of promising for growth and things like that. We're past the COVID. We're past shutdown. And you're sitting on this little position and it's working its butt off for you. And that's how you trade. So look, guys, let's see how things shake out. Like I said, we got some energy after the bell. We've got some retailers this week. We got a big employment report that starts Wednesday with the private payrolls, and we'll see how the week shakes up. Okay, we're still, just like I told you guys last week, we still got those SPY puts. Everything else we have is at least 3-4 weeks out. So we're not real concerned. One of those is Ford. We've got some $13 calls. We've also got Ollie, which is just in the crapper again. So look, guys, if you're trading and building your portfolio right, you're going to have bad trades. You're going to have times when trades just don't go right. And you should be able to take it with a grain of salt like we do. We're not happy about it, but you know what? We're not ruining our day. We're not standing on the ledge ready to jump. We're not trying to explain to the wife why we can't pay the rent this month. You know what I mean? So yeah, manage your trades and trade properly. Have a thesis and be smart and be patient, be disciplined. Again, you see how it's two disciplines, right? The way we trade options is one discipline. The way we trade our regular portfolios is one discipline, right? But we follow that discipline. That's staying disciplined. Okay, guys. So I just wanted to share that with you guys. Hope this helped. Like I said, we're still the only thing we've got on the board, and we're not going to open anything up today. Probably not tomorrow either. Crypto. Let's talk about crypto. We talked about it. We started a little crypto section for our members, and it's doing really good. We bought crypto about 2-3 weeks ago. We got into the crypto game, and we're already up about 20% on that portfolio. Nice. So again, patience, discipline, have a plan, follow the plan. The plan doesn't change because Johnny, Jack, and Jerry decided to change their plans. You stick with your plan. All right. It's your portfolio. Nobody's going to pay your bills when that portfolio goes to zero. Okay. All right. I'll see you guys tomorrow. Don't forget, we've got something a little unusual for the stock of the week that I think you guys will really enjoy. So tune in for that, and we'll be back tomorrow morning with the market update. Okay, guys. Other than that, I think this market's just kind of going sideways right now, but we think we're going to start seeing a little trickle down here. It depends. Who knows for sure. Anyways, oh, and let me close with this because this is a big conversation piece. The Buffett investor showcase this weekend. Interesting showcase, right? I don't think we heard anything from Buffett that we didn't know already. I thought it was a little, especially Charlie Munger. He was a little venomous there when it came to cryptos and Robinhood, right? We obviously look. The Charlie Munger Thanksgiving dinner list will not include anyone from Robinhood or the crypto world. We get that. And look, they've been successful investors for a long time. But you see what I'm talking to you about discipline? You see what I'm talking about discipline? You see how they follow their discipline, whether or not they're right or wrong about crypto. That's what they believe, and that's how they stay disciplined, right? I mean, it's worked for what, 40, 50 years. I mean, the guy's a multi-billionaire. All right, guys, let's call it an update. This one's running a little bit long. Let's see how this afternoon shakes out. Go Suncor and boo S&P. No, I'm just kidding. All right, guys, I'll see you guys tomorrow morning. You guys have a great day. And don't forget the stock of the week tomorrow. It's going to blow your mind. All right. 60s blow your mind.